Tesla absolutely bombs for earnings. Are we surprised? Are we honestly surprised? We called it in the last two videos that Tesla will more than likely drop for earnings. And I even gave you guys the levels to look out for: 202.5, 203, 200, 198, and 194. Right now, we are heading towards 194. Tesla is currently after hours at 195.7 range. It's not looking good. Okay, it's not looking good. I also said in the last video that if we break below 194, things could get really ugly really fast. If we break below 194, be ready for a potential move to 190. And then after that, we're looking at 180. Okay, so it can get ugly really fast. So if you are one of those traders, market opens and you're ready to, and you just think this is the bottom for Tesla, and you're trying to guess the bottom for Tesla, and you just decide to jump into on calls, do not be surprised if it goes against you. If you need more proof that Tesla has more potential to go down, we can look at some historical data. This is Edgeful. Link is in the description below. 7-day free trial. You can see how stocks perform for earnings, before earnings, after earnings, during earnings, FOMC meetings, CPI data. It has all of it. It's really good. Try it out. Link is in the description below. But if we look at Tesla and how it performed within the last year as far as pre earnings, it ran up. And then during earnings, it dropped. And after earnings, it dropped even more. Okay. So something to keep in mind before you decide to call the bottom and call this the bottom and jump into calls on Tesla. All right. So watch out for those levels: 194, 190, 180. If we get to 180, I'll make another video going over that. But as far as upside goes, again, I preach it in all my videos. We want confirmation. And right now, we have absolutely no type of confirmation. All right. So if you got puts on Tesla, congratulations. I think the anticipated move was about $14, 7%. So congratulations if this holds and continues to go lower. If you got calls, I'm sorry. All right. That's all I can say. All right. So let's look at the overall market. So looking at the overall market, it's not looking good so far. Okay, it's not looking good so far. Now, I will say a dip was expected. I don't think anyone should be surprised that a dip is coming in, or a potential dip is coming in. If you are surprised, then you probably shouldn't be trading because you just think the market goes up. But regardless, looking at the NASDAQ right now, we are breaking below this 4-hour trend. And if I'm looking at my next level, if we break below 17,400, I think the market is going to drop pretty hard. And when I say break below 17,400, I mean break and hold. Okay, break and hold. All right. You could count 17,500 as a psychological level. That's completely fine. But right now, I am looking at 17,400. That is the level I'm looking at. If we break below 17,400, I am looking at 17,100 and then 1,700. I keep saying 1,700, 17,000. Okay, 17,000. Those are the levels to look out for as far as the NASDAQ. So heading into tomorrow, I honestly probably wouldn't even trade. I just wouldn't. I probably wouldn't even touch anything. All right, that's what I'm looking at as far as the Nasdaq. Even looking at the Qs, same thing. We have a bearish engulfing pattern on the Qs. We also are rejecting the daily trend line. We're also rejecting the 4-hour trend line. So the Qs aren't looking too good as well. Suspect they move towards 423.5, 423 range. If we break below that, as you guys can see, we have a lot of gaps towards the downside: 413.5 and 407.5, 408. So we have a lot of gaps to fill towards the downside. So be on the lookout for those levels. I personally think tomorrow we could see some more bearish movement. Okay. Again, you should not be surprised that this happened. I mean, look how much we ran. We've been running up nonstop. It's been absolutely crazy. So at some point, a dip was expected. But overall, as far as heading into earnings next week, big earnings next week, and Fed meeting, I am still overall bullish on the market. Okay, but a dip will be expected. All right. So that's my thoughts as far as the overall market. Expecting some more movement towards the downside. Looking at the IWM, I went over this last video. We are currently in a trade on IWM. We're in 195 puts. It's currently at 194.36. If you want access to my signals, link is in the description below. Discord. We do stocks, we do Forex, we do crypto. It's only $25 a month. Join so you can get my signals and you know what you're doing as far as the stock market, and you could potentially make some money. All right. So as far as that go, as far as IWM goes, we caught this yesterday. In the last video, I said this thing could drop even further. Now it did play games in the morning, and it went all the way to 198 and tested the weekly resistance level. That was pretty crazy and pretty scary too. For puts, okay? If you had puts like right here, all right. But as you guys can see, it formed a double top here and here, and then it broke the monthly trend and also broke the neckline. So I do expect a move further down for the IWM, potentially filling this gap right here at around 193, 192.5. And any lower than that, I'm looking at about 191, 190. Okay. Now, once this gap is filled, we could have a potential head and shoulders. As you guys can see, we have a shoulder here, and shoulder here. Inverse head and shoulders. Sorry, I know people take that very seriously, but we do have a potential inverse head and shoulders pattern in the future. Okay, in the future, all right. So that could happen on the IWM. I think this thing is due for some type of breakout. Now, if this head and shoulders for whatever reason fails, I am looking at a move back down to want to retest this 188 level, 189, and then maybe we form some type of double bottom. Who knows? Okay. But right now, these are the levels I'm focused on IWM 193, 192.5, and the lowest I'm looking at is potentially 191, 190. All right. So that is what I'm looking at as far as the overall market. Last, I want to go over Intel. We did do 50 strike calls on Intel heading into earnings. I did close the play today. We got into play at around 48.3, and we closed it at around 49.5, 49.6. So we made a little profit. The reason why I closed is just it's just Intel is just so boring. Okay, it's just not worth the gains unless you have like tons of contracts. Honestly, it just wasn't worth it. So if you have a small account and maybe you want some small gains, maybe this is the stock for you. It just wasn't for me, so we closed that small profit. Nothing too crazy. A win is a win. But as far as Intel goes, I do think they could potentially beat earnings. I do think they look good for earnings. Heading into tomorrow, I believe their earnings is tomorrow after hours. Heading into tomorrow, I wouldn't be surprised that we get some type of gap fill at around 50. What is this? 50 point, we'll say 50.2, and potentially go even higher than that. Now, as you guys can see, the market did take a dip, and Intel just completely ignored that. It's just still holding strong. So that is a good sign that maybe it's waiting for its earnings, and then we see what happens from there. As far as how far Intel can go, I am looking at 55. Now I will say, at 55 is the monthly trend line right here, this white line. So that's as far as I'm looking. I see people saying 60, 70. I don't know. All right. It's possible. It's earnings. Who knows? But right now, that's as far as I'm looking at. Now, I will say that if Intel hits 51 or 52 prior to market close, I 100% would not be interested in calls. Okay. I just don't think a move to 55 is worth it. It could go higher again, but I'm just going to go with my levels and trust my levels and stick with 55. And a monthly level is pretty strong. All right. So that's what I'm looking at as far as Intel. I think they're going to beat their earnings. As far as how far they're going to go, I don't know. I'm just going to stick with 55. If Intel just so happens to dip prior to earnings, I may play with some profit, play with some calls, and jump in some calls. All right, nothing too crazy. I'm not looking at anything too crazy. All right, another thing I want to look at on as far as Intel go is that we have a potential double bottom. Did we break this neckline? We broke the neckline, so yeah, we have a potential double bottom, but right here and right here. All right, and then if you want to say this is a neckline break, you can go with that. All right. So even though we broke the neckline, it's just not a clean move to the upside. And that's probably because it could be because the market did a slight pullback, but who knows? Okay. And also, we're above this daily trend line where we bounced off this daily trend line here. We are breaking above this daily trend line. So Intel looks really, really good for upside. Again, as far as how far, it doesn't really move much, which is really annoying to watch. But I will say 50, 51, highest I'm looking at is 55. So that's all I really have. If you want access to the signals, we do stocks, crypto, Forex, all that fun stuff. Link is in the description below. If you want access to my charts, indicators, as well. Link is in the description below. If you want access to Edgeful and you want to see how stocks perform during certain time periods throughout the past history, past year, or historical data, things like that, link will be in the description below. And as you guys can see, Intel typically does bad pre-earnings. Then during earnings, it runs up, nothing crazy, and then after earnings, it goes back down. All right, that's just historically. It doesn't mean that's going to happen this earnings, but it's just something to keep in mind when you're trading stocks for earnings or if you're interested in trading stocks for earnings. But that's all I have. Until the next video, have a good one, traders.